I've been meaning to do this video for a while because somebody asked me about this, how I trade, or at least how I'm trying to trade, and how I read the market. I learned a lot of what I learned. I learned a lot of this from Al Brooks, and then also just studying the market. If you do the Brooks trading course, you see a lot of this, but it's very not very straightforward to put together. But after a while, things start to make sense. The fact that you understand what this the market is doing in the market cycle. Al has this. Al has broken the market into four different groups, and the market is either doing four different things. It's either in a breakout, it's either in a tight trend, either in a broad trend, or in a trading range. Right. So this is a trading range. A broad channel is maybe something like this. Tight channel is something like this. Let me look for another tight channel. There aren't many tight ones. This is a tight. Almost call this a tight. No, it's a bit tight and broad. Yeah, this is a tight channel. There's actually a breakout here. This is a tight channel. This is a trading range. And the market's always in one of the four. It starts off with a spike, then it goes into a pullback, then it goes into a channel. So here, when you have this two bear bars closing on their lows like this is a breakout. You don't have any pauses. You don't have any bull bars. Here you have the first bull bar. So it's now going into a tight channel, right? Although it's not a pullback, right? And the reason why I'm saying that, this bar has not crossed this bar. You don't have a low below this bar, so a high above this bar. So this is now the market is slowing down. We're still going lower. And that's what I love about this system. We're still going lower, but we have just paused. Then we go down one more. Here is the first pullback. So at this point, we're now in the channel phase. And as you can see, we pulled back to the moving average. It's reasonable to sell this to the breakout down here. We broke out. And at this point, you start to count the legs for wedges. So this is the first pullback, second pullback, third pullback. This is a wedge, three pushes down. Now, that does not mean that only when you have three pushes, this always happens. Sometimes you can get a fourth, sometimes you only get two, which is a double bottom. And essentially, here we had a failed breakout, which is why I put here failed breakout. Normally, this is the range. These are all ranges. We go for measured moves. Every time we break a range, we go for a measured move, right? So this you can call a range from this here to this high. This bar here created a range to this measured move target here. That's what I assumed. Here's another range for this measured move target down here. The bears achieved the target. Here's another range for a measured move target here, in which they achieved over here. So here we've gone side, we've created another range. So this is the measured move target, which they achieved over here. So the bulls have now taken control. The market has switched from shorts to long, but it's bad follow through by the bulls because you're getting lots of overlapping bars. Price is not moving, is not accelerating as fast as it was coming down. So we're in the bear trend. This is a bull leg in the bear trend, right? So, and it's pretty much this sort of thing, down, pull back, down, right? So that's what I do whenever I'm looking at the market. I'm really trying to study each bar relative to the previous. And I see here we have two consecutive bull bars, one really big, one a doji. So this could be in long if we had another bar above this, but we didn't, even though we triggered a buy up here, but this sold off here, right? You could say it's a double top based on a test of this area here. So one, pull back, two, sort of thing. We've come back here, double top here. So you have here two bear bars, and then you have a pullback here, a wedge top, one, two, hang on, where did the wedge stop? We went down here, one, two, three, right? So this is the first high, second high, third high, right? This is the pullback. So imagine this is like a bear flag. You can now take this short below this bear bar, even below this bar. It's not a really good one would say take it below here, but this is too much risk. I would probably just take this short anywhere. But then again, you want this bar to close because you don't know what's going to happen. I don't know. I'll probably take a short here, put my risk here, or even here, probably here, put your risk here. Because you know one thing, there's sellers here because they caused all this selling. So they've come up here and look at what's happened. We've come all the way down. This is the first pullback. This is the second pullback. Whenever you have a bar above the other bar, second pullback, third pullback, right? This forms a wedge. Reasonable to buy this with a stop below here. The market has switched from always in short to always in long. This also, you got to look at how we're moving down. This is a broad channel, i.e. the pullbacks are so deep that whenever we're moving, I mean, here we haven't, do we have any overlaps? We don't actually have any overlaps here, so this is a very strong drop. But the pullbacks are so deep that the market is not going to go very far. So from here to here, you get this long, and as a result, you can see how far we've come back. So this is the first leg pullback, second leg, hang on, no, first leg pullback, because this went below this. So 1 pullback, 2 pullback, 3 double top, but it failed. It never went down, right? So because it failed, we go for a measured move up, and look at where we ended up at the top here. The market over here, we have a wedge top, 1, 2, 3. We sold off, same thing as we just described. Same thing over here. We went into a triangle, but we also had 3 lows, 1, 2, 3, and this was the next one. We had pullbacks down here. Below the moving average after a gap down, market is trying to break the go into always in long. Bulls can't get past the moving average. Bears are selling at the moving average because that is it's forming a dynamic resistance. This almost tells you you're in a bear trend, but the trend is so weak, we get a bull breakout, pull back, another 1, 2, 3, double top. Then we start to reverse, 1, 2, 3, and then we reverse again. The market does the same thing every single day, right? We come over here. This actually is where the market, this breakout started. All here, 1, 2, 3, right? This is the previous day. We rallied strongly, pulled back, second pullback. This is the first pullback, second pullback, third pullback. It's reasonable to sell over here. I read this wrong when I traded this. I thought this was the first and the second, but this is actually the third. Reasonable to sell at this low, 1, pullback, 2, pullback, 3, nice wedge bottom. Reasonable to buy this, stop down here. 1, pullback, 2, pullback, 3. This failed, so we're going for a measured move up. So one could put this up to here, and we went all the way there. So these are things that I look at, and I'm trying my best to get better. Here we have a big, massive gap up from the moving average, 2 bull bars closing on their highs. This one's a massive body. It's reasonable to go long here. Here we have a pause, very similar to today's price action. The opposite, first pullback. What was the second pullback? Do we have it? This is a low. Does this cross low? Second and possibly third. So this is the wedge top. Oopsie. This is a wedge top. Reverse 1, pullback 2, pullback 3. I almost think I've miscounted, but then again, there's a wedge top over here, and this is a wedge bottom. This is a tight trading range. So remember, we're going sideways here, and then we go back up, double top with this high, and then we eventually go down, 3 pushes down, and then we go back up. And again, 1, 2, 3. Oh yeah, this is one we just did, 1, 2, 3, and we're in a tight trading range, went even higher. And in fact, you could even count the highs, 1, 2, 3, selling off. And that's how essentially I look at the market now. It's that I look at a day and I look at the previous day and see how we've traded the previous day. I see a wedge bottom over here, so I'm expecting a test of the low. We break out 2 bull bars, closing 1 massive bull bar, closing on its high. We're always in long at this point. Reasonable to buy this with your stop here. First pullback is going to be minor. 1 pullback, 2. We actually just get 2 pullbacks. That's interesting. So we get 2 pullbacks. And in fact, you could then now go for a measured move. If we are going to break this range, I don't know if we hit the target. No, we did not. But what did we get? Reasonable to buy this high, because this is a high to buy. So this is the first pullback. This is the second pullback. It's a double bottom. So you could buy this if you wanted, because this triggered. This one triggered, but it's not high. It's not a high probability buy. The high one's never high probability. The high 2 is a higher probability. And what I mean by high 2 is this is the first pullback. This is the second pullback. So this is a higher probability buy. Because the market, when it does something, it likes to do it again. If it can't do it the first time, it will try it one more time, and it did it lower. We know there are buyers in this area, so this is a higher low major trend, not a higher low major trend. Actually, it is a higher low major trend reversal. This is the first low, second higher low. This is the third one. You could take this higher. You have a bull breakout here, gone sideways in a trading range, and what do you have? 1, 2, 3, nice wedge bottom, double bottom, heading back up. So this is the bottom of the range, this is the top of the range, and now you're scalping in between. Another wedge bottom here, going back up. Right, this is literally how I see the market. If you have any questions, just send me a message. I'm very happy to help and share where I can.